Okay, carrying on in part 3 here of this little exercise demonstration, hopefully something you'll get some benefit from. Let me just go through here. I've just opened up here so to show you that I've added 2 indicators now to the same chart where I still have the bars kept transparent. I've ordered I've added the volume zigzag histogram. This is the sister to the order flow zigzag. So I'm getting a visual representation of those swings here based on volume. And with the volume represented down here, so I have the volume zigzag histogram. You'll note it, and you would want it to be this way. You would want it to match the order flow zigzag. So you again, 14 period 2 times the ATR to create a new swing. Additionally, I've added the Trader's Dynamic Index, which is just a kind of a souped up RSI. I use it a lot. I like it. This is our version of it, and here we'll review it. Now, one thing to note here, a couple of the variables here. I think the default, you've got a lot of choices here in terms of the moving average. You choose EMA as a good baseline. I like a 13 to 734. You can experiment with this as you like. The thing that will be most obvious here is the standard deviation multiplier. Now, for smaller sizes, and I would say if you're down on the 2 minute, 2,000 tick, maybe a 1,000 volume, you might want this to be set a little bit higher. So I think the default, it comes at, I can't remember now how we set it. It's either 1 or 2, but of course you can play with this. I think if I were going to smaller sizes, I will typically have it a 1.62. For the standard deviation multiplier here on a 5 minute, because it's slower, I'm gonna take it back to 1 standard deviation, and we'll look at a couple of examples of that. So that the Bollinger Bands here that are framing, that's 1 standard deviation over that over 14 periods. That's going to reset for a second. It's just running the calculations for the buy-sell momentum. So as that resets here, but we don't even need it. So as we're sitting here at the 5 minute here, again, we're going to use the last couple of days here. Oh, let's give that, there they come. Okay, so now the POCs and the speed of the volume is starting to show up here. So what I want you to see here is what happens here. This is just easy to do. You've all probably done something similar. I'm just taking the crosshairs here, and I'm just looking at the pivot. Okay, what happens at this pivot? Well, if we look down to I would consider this a momentum-based tool. Well, one, I can see the volume of that we ended up here, that entire move down, pretty beefy move. But as we came into the low down here at this swing, now you can say, well, hey, wait a minute here. You were outside of the Bollinger Bands here, but we're still within 2 ATRs, right? So I don't get a kickback, even though I get this. I do get a little trading range here. We've looked at that a couple of times. I get this little trading range here. I don't get enough to kick back. So visually this helps me. So even though I see, okay, I'm getting a little retrace here, the midpoint here, that's a 34 period of the EMA, that midpoint here is important. So I come back down. Now as I come outside here, note, in addition to being outside of the Bollinger Bands, I'm below the 32 level here. So with a TDI, it's 68 and 32. Now I get not only outside of the Bollinger Bands, but I get below the 32. So I'm, I hate the terms oversold, but what I have created here is the potential for the energy snapback. So what I want you to see here is that as we start to come back inside the Bollinger Bands and we cross the moving average here, which many people just call it a signal line, but it's just a derivative of the RSI. As we cross that, here I get a doji bar. I get a little bit of a pause here as I get some sell volume. Again, we looked at this before because bears are trying to go get the stops that are down below that pivot. But note the RSI. We're climbing. I get up here. Now, I've gone far enough to create a swing because I've gone 2 times the 14 period ATR. So I get a new swing. Now, I don't get to the 50, which is just like a traditional RSI, is very important. If you're reading an RSI, the 50 period, I would tell you, is more important than the upper and the lower parameters. What happens at the 50? Well, I turn back down. Now I get another push up here. Now note here, I get a little bit of a volume swing here, so I can see here I've got some buying volume coming in here. My retrace, look at the difference, right? So I'm coming down here. I can see barely got any volume here, and now we're going up again. Now strength of trend is being reflected here because I get this this little double hitch here. Now I come again, I'm watching down here. Do I have any moves, anything significant here enough to cause a new swing? And I don't get it. I get up to the pivot. Now, what you're watching for here, and there's actually a secondary one in here. You can actually see that. Let me take that off. You can see it reflected in the swing structure here. So we get a swing, we get a retrace into the golden zone, and then that gets its target right there. And you can see that reflected in the RSI. Right here's the pullback to the 50. Remember, the 50 is critical. We hold the 50. Now we shoot up higher again. Now up at the pivot to where the bigger opportunity is when I get right here. I'm in the pocket, right? I'm just what I'm looking for. I'm in between that prime zone here between the 50 and the golden zone. I got that prime real estate right here. Here's the IB mid, right? Natural resistance point here, just splitting the IB. I get right into that section here. So I would be on alert. Okay, you're on. Hey, heads up between the 50 and the golden zone. Where's the RSI? Oh, geez, I'm outside. I'm above the 50. I'm outside the Bollinger Bands. I'm not to the 68 here, but I'm outside the Bollinger Bands. Now I'm in an area here where I'm looking for evidence of the momentum change, because I've had a momentum push higher. I've gotten to essentially to the midpoint of the day. Now all of a sudden, note, right? So I start to move down. I get far enough here. I get far enough so that I've moved 2 times the ATR. Look at the 3 POCs here, all just right sideways. Now as they're sideways, so this might have you pausing. As you're not sure, oh shit, we're not getting any movement. POCs are exactly the same. Next bar. Now the POC gets a little bit lower. Now look at the TDI. All right, look down here. Now we've crossed outside of the Bollinger Bands. Now we're crossed inside. Now here's the POC. Next POC. Now I'm getting some acceleration here, right? The magenta triangles here identifying this. Again, it's a proxy for delta. The speed of the volume is picking up, so sellers are getting aggressive as we come into the IB low. Now you might be cautious here. That would be an area to, if nothing else, tighten up a stop, because as I was just showing you, we know the algos are very thick here. So we're coming back to, here's the algorithms will use anything and everything on the board they can. We're coming right back to the opening range low. That's potentially an algorithm will kick there. Nothing happens, right? We don't get enough. Now here I got 3 speed bars here telling me, oh, bears are getting aggressive. Okay, look at the RSI, right? Do I want to be thinking, oh, maybe we'll get some support here at the IB low? Is there anything here to suggest that? Anything here to suggest that? Where's the next POC? Down here. Now I get a pivot. Now this one, right, this is interesting, because if you look at it here, if we take from the oh shit, let's get this one off here. If we look from the last swing here, this is just a little something you'll learn with practice, right? So if here, let's do it this work. If I go here, right, we've broken here. I think I just showed you this on one of the earlier videos. So as I've broken here, now so I know I have a break in the algorithm pattern here. So that's a heads up. So the next time I get a swing, the next time I get a pivot that comes back the other direction, if I get into that pocket, hey, heads up, right? There's an opportunity right there. So let's pull these off. And in fact, it's textbook perfect, right? So again, let's go back to what I was focused on here. I'll digress, right? So we're up here now. The RSI swoops all the way down. Now we're not strong enough. The move isn't strong enough to get outside of the Bollinger Bands. And then I get a retrace. What do I retrace to? The 50. Right, heads up on the 50, right? I would tell you it's the more important of all, every level on the board in an RSI. The 50 is the most important. So the fact that we can't clear the 50, because there was you could have been looking at this saying, okay, we're gonna rally into the close. Now it is Friday, we've been down all day, but as we start to roll over again, which is what I'm trying to get you to, decision point. What are you doing here? Right, we're on a 5-minute chart. There's not going to be that many trades, right? Because we've reduced the number of trades deliberately by going to a 5-minute or a 4,500 tick or a 5,000 volume. So I've got to be deliberate in my decision making, because I'm not going to have that many trades that's set up. So here's one set up perfectly. Okay, well, where's the RSI? It's green. Do I want that trade? Oh, I'm not so sure. Right? You don't have to get the tick high of it to make money here. Now POCs are starting to get lower. Now what's happened to the RSI? Next bar. Okay, that may have been too tight. I wasn't sure. I couldn't see. Now it gives you a second chance at it here. Now note here, it's not a far enough move here, and this is a bit of a tell, which is why I like this, and I would encourage you to consider it. I don't get a pullback enough to create a new swing. It's not big enough. I can look at the zigzag as well as I can see it underneath. I don't get a retrace that's beyond twice the ATR. So I get just a very standard retracement, which is what I'm hoping for, right? If I miss this one, and I get what I want is that retrace, because if I go too far here, now I'm thinking, oh, okay, well, now I'm not sure. Are they going to rally into the close? I'm not sure, right? That's very typical, although less so on a Friday, particularly on a Friday where we've been down all day. I'm just kicking back. What do? I kick right back to the IB low, which is natural resistance. Now, where's the next POC? What happens down here? What happens down here? Right, I get enough. I have a little tease of it here. When I made the pullback, there's the signal line here. I'm flirting with it, but ultimately I get down here. Now I get exactly what I'm looking for. I've come all the way down here to where I can see that I've hit my targets. Right, and actually one of them gets the second target. Now this is the session low at that moment in time, right? So you don't know it's the session low, but we're creeping into the close. This is just after 3 o'clock on Friday. Now, as I come back up, look what happens here. First thing that happens, well, it's speed of the volume increases. Buyers are aggressive here. Where's the next POC? A couple of POCs, one little attempt to try and drive it back down, up, 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 up. We go right back to that. I've shown that a couple of times here. Let's go another day. How about this one, right? Swing right here. Okay, geez, I'm in the golden zone. I'm not sure. Here's the first bar out of it. There's the POC. Next one. I mean, you can just see it, right? You don't even have to see the bar. Where's the POC? Now I get volume divergence here. Now I was showing you this earlier. Why is that orange? Because I can see the volume divergence here, right? So the amount of volume in this swing is less than the amount of volume in this swing, and this looks like the high. It travels further in price, yet I have less volume. So heads up, right? Here's the algo. Here's where the software took profit, right? Here's the algo target right here from this golden zone. It's damn near. I mean, this is tick perfect from the 65. Gets the target. Now, as I'm up here, do I want to sell that? Well, hitting the target is not necessarily a sell signal, but I might look left and I probably make the deduction here. This is likely an order block here, right? Created a big change of character and break of structure, so I'm coming back. I'm digressing into other content here, but that was certainly there, right? Or you could just think of it as support and resistance. Now, do I want this trade? Do I want that short? Boy, that's a pretty big rip higher. It's been very easy for you to have been second guessing that, thinking, holy smokes, man, look at this. Why would I not assume we're just going to do it again? All right, here's one, right? We know that the market likes to move in patterns. Well, we get this massive sell-off here. But what I want you to see, let me bring this back here, is as we're up here, look at the RSI. So when it's coming here back to what would have been the natural point of support, which is the IB high, how does that RSI look? Right, this bar here, right? You can see the volume was there early on, drove it all the way down. Well, here's the POC of that bar. Where's the POC of the next bar? Down here. Next bar, next bar, next bar. Look at the RSI. I'm falling hard, right? When we get that far out, right? This is a serious move. We're that far out. Now, all of a sudden, I'm back in. Right? I get the little curl. I'm back in. Now I'm above the signal. I get one little test here. Now, look what happens. Here's the green, right? Boom, 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 boom. Right, up it goes. Here's more of it. Up to the top. What happens here? What happens up here? Right, we get above the 68, outside of the Bollinger Bands. That's the beauty that you want, right? If you can get those are mighty powerful, right? So this is one not to miss. If I can get, particularly here, if I can get the RSI above the 68 or below the 32, heads up. Right here, I don't quite get it. I mean, I get an extended push out, but it doesn't get me up to the 68. Before rolling over. This one has enough horsepower to get me beyond the 68. It curls back in. Look at the POCs as we start to come back down. POC, POC, here's the acceleration, here's the acceleration, sellers are getting aggressive, here's one little attempt, right? I mean, you can almost visualize what's happening there just from the POCs. And from the volume, here's what we had a little kickback, right? And then we end up, well, not much of a draw, but we get this little doji here, so we probably stall, and then we come back down, then look at the POCs going into the close. One more day here just to make the point. What am I doing? I'm still on the 5 minute here. Let's go over to, it wouldn't matter. Here, we'll go back earlier in the week and try and make the point here. Let's let's see. Yeah, this will work. Well, I know it's the same day. Let's go back a different day. Okay, let me open this up a little bit so we can see it better. All right, so here's the 4,500 tick. Oh, I mean, here's, let's see if I can get something early. So here we get outside of the Bollinger Bands here. Now note, this is at a 1.62 on the Bollinger Bands because it's faster than the 5 minute. So you'll get moves a bit more extreme, right? So you have to kind of use a little judgment there based on your preferences. It's not so much that it matters that it's getting outside the Bollinger Bands. It's just one more conviction point. So when you see that, like this right here, where I'm outside of the Bollinger Bands and I'm above the 68. Oh, come on, Ninja. Oh. There we go. Okay, so here. Right. So note I've got divergence here. You can see, so you see I've stacked divergence here. So the first one here, I don't get as much volume here. That's why you see these two lines connecting. I get another push up. I get more divergence. I get more volume divergence. But on this one, the RSI gets above the 68, curls outside of the Bollinger Bands, and then we cross and come back in. What do we drop to? Golden zone. Right, it doesn't. Right, we essentially double bottom here at the 50. Remember, the 50 is what's important with any RSI. At the 50 here, now, can I go back up? Where are the POCs? Here's a little pause that creates the next one. Right, look at the RSI. Now, up we go again. Hitting targets, right? Every green line is a target. Blue line is a second target. I'm hitting targets here. What's the RSI doing? Right now I'm coming down. I come down to the 50. Again, look how the 50 is repeatedly tested. Here it's support. Here it's resistance, 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 resistance. Same thing up here. Now we're up here. Where are the POCs? What's happening to the RSI? Here's the little kick. Now this is very sensitive. So we come back here. What do? I get a retrace back to the 50 where the POCs. Right? I think you see my point. Now finally here at the end of the day, I come back here and note the divergence, right? So that's why I like to have this down here because I get a visual representation. I can see it. Okay, less volume in that swing. That looks like a perfect measured move. That looks like A to B equals C to D. I come in, here's the divergence point. Now look at the RSI. Right, so I've had divergence in the volume represented here as well as on the chart. Now here comes the RSI. What do? I come right back into a 50. Right, a little sideways. There's the aggression. We wind up the day. Okay, I think I made that point here. So this is just something to consider. Now, it doesn't matter that you're using these. The exercise of taking the candles off the chart and just focus on your tools, because so often during the day it's the candles that are fucking us up. It's the intra-bar swing. So if you eliminate that and you just focus on, okay, where is the market truly going? And often we get a little bit blind to what actually is mattering, and it's the little squiggles within the candle where we overreact. Oh shit! I thought it was going down. It looks like it's going up, and that's just intra-bar, just the natural ebb and flow back and forth of as the market transacts. And if you slow things down, you'll start to see this a little bit better. All right, that's probably enough of this drill, but I think this is a worthwhile exercise. Now I'm going to wrap it up here because I don't want these to be too terribly long. So we're going to finish. I'll put everything back together here. I'm going to probably add the devil's edge just because this is the template that I've been trading with lately. And we'll put them together and we'll start to see how we can look at all of this together and hopefully get you making better trading decisions. Okay, so stand by we'll wrap it up on the next one.